Welcome to another video from Creativo Solutions. You're watching the Accounting for Non-Accountants video series. If you have any comments or questions, please post them below and subscribe to the channel so you'll be the first to find out when new videos are uploaded. There is more information, content and resources on the website. In today's video, we're going to be looking at owner's equity in more detail. So far, we've been focusing on financial position, financial performance, and we've been looking at the different definitions relating to an asset, a liability, income, and an expense. Now we're going to be focusing on owner's equity. We've looked at all of those in previous videos, so if you haven't watched any of that, please go back and revise. It's important to understand the basics because when moving forward, when we look at more complicated application, it's going to be very easy to approach if we really understand our basics. So what is owner's equity? Owners or shareholders consider how much is owed to them because they are entitled to the profits of the business. So think about this. If you're the owner and you're going to be creating a business, what you have in terms of equity in the business is yours and you own that. When a business starts, a business is going to require capital, and should the owner give additional capital to the business over the life of the business, that will still be viewed as capital. The definition is money or assets contributed to the business by the owner. So the owner is the individual that's going to be giving capital to the actual business. Drawings is the opposite. Money or assets taken from the business for personal use by the owner. So the one focuses on giving assets or money to the business and the other focuses on taking money or assets from the business, both relating to the owner. A very important equation to learn for owner's equity is owner's equity equals capital plus the profit or minus the loss and minus the drawings. So when looking at this equation, we know owner's equity is going to comprise of four separate accounts. The first account being capital and the second being drawings, which are the ones we've looked at here in terms of the definition. We know that profit and loss comes from income and expenses. We spoke about that when we discussed financial performance. So owner's equity actually comprises of capital, income, expenses, and drawings. And that's going to give the net worth of that specific owner. Here's an example. What is the owner of the bookshop entitled to? We know that the bookshop is going to require an owner in order to start the business. If the business is going to start, it's going to require capital. All capital could be contributed during the life of the business. So the owner invests capital. Then we have customers coming to the business to buy books and to give the bookshop cash, and that creates transactions. So depending on how many transactions we've got, the business will either be very successful and they'll be generating a profit and hopefully they'll be performing. The owner then takes from the business and we call that drawings. So owners will take from the business when they require a certain amount of benefit that they're going to derive from the actual business. So when looking at this, we can see that the owner is entitled to the net worth. The business is going to be operating, they're going to be selling goods, they're going to be collecting cash, they're going to be paying expenses, they're going to be running the day-to-day operations. And the owner is entitled to what's left over. So the owner is entitled to the net worth, which we now know is the profit or loss, and depending on how much they've contributed and depending on how much they've drawn, the net amount is going to be the owner's equity. We know how important the rules are. We've seen them before. This summary here is describing the importance of knowing your rules to apply this in different scenarios. So owners are entitled to the net worth, and we know this includes the capital, the profit or loss, and the drawings. So when looking at debits and credits, we know there are two accounts here that focus on financial position. We've discussed this in a previous video. So our assets and our liabilities will determine financial position. We're focusing on equity, so we know our capital, our income, our expenses, and our drawings is going to affect our owner's equity, and that's what we're focusing on. So what's going to happen to owner's equity when each of those 4 accounts are being affected? Well, let's first start with capital. If capital increases, there's more capital coming to the business. Capital will increase on the credit side, and because capital is increasing, we need to think about net worth. Would the owner be worth more or less? Well, the owner would be worth more because they're entitled to what the business has. If I focus on income, well, income is used to help calculate profit. The more income I have, the more profit I have, which means my owner's equity will also be more. So when income increases, our owner's equity will increase, because that will be a benefit in the form of more profit. The opposite is true for an expense. If I have more expenses, I'll record more expenses. So if I record more expenses, that's going to reduce my profit or possibly create a loss even. So expenses, should they go up in terms of their recording? So if I record more expenses, I'm going to decrease owner's equity because it's going to reduce the profit or increase the loss, depending on the situation. And then the final rule is for drawings. Drawing starts with a D, debit starts with a D. We know drawings will increase on the debit. If we're looking at drawings as a definition, the more I draw from the business, the less I'll be worth. So when drawings increases, your owner's equity will decrease. And those are the most important accounting rules. And if we know where the pluses and minuses are, we'll be able to apply that to different scenarios. This takes us to the end of today's video. Thank you for watching. Please subscribe to the channel so you'll be informed when we upload new content. If you have any questions or comments, please post below and hit the thumbs up button to like and support the video.